The whole banking system, the whole financial system is man-made. We made it up. This is not something that occurs in nature. It's not something that was, handed down to us by the gods. It isn't governed by laws of physics or biology. It is a made-up system that goes back a few hundred years at most that we have created to serve our financial needs. If you like what I'm doing, please be sure to click the like button and subscribe to the channel. I would really appreciate it. I'm going to start off by reading a little bit from the 6th chapter of the Gospel of Matthew. This is where Jesus is delivering his Sermon on the Mount, delivering his commandments, his instructions for how people ought to live. In verse 27 he says, "Which of you by taking thought can add 1 cubit unto his stature? And why take ye thought for raiment? Consider the lilies of the field, how they grow. They toil not, neither do they spin. And yet I say unto you that even Solomon in all his glory was not arrayed like one of these. Wherefore, if God so clothe the grass of the field, which today is, and tomorrow is cast into the oven, shall he not much more clothe you, O ye of little faith?" Moving on a little bit, he says, "Take therefore no thought for tomorrow shall take thought for the things of itself. Sufficient unto the day is the evil thereof." So Jesus is telling us not to trouble ourselves with things that are out of our control. He's even telling us not to trouble ourselves with things that are in our control, like food and clothing, saying, do not trouble yourself with these things, do not worry about these things, and certainly don't worry about things that you have no control over, like he gives the example of trying to change your height, or worrying about tomorrow, about things that haven't happened, things that are outside of our ability to interact with or control. So why do I bring this up? Well, I'm talking about this overall story of these recently failed banks and the bailouts to rescue these banks and their depositors. I'm actually going to read a little bit from a Wikipedia article about the March 2023 United States bank failures. Wikipedia can actually be a pretty good place to catch up on news, get the details about a certain story. This is a section of the article about the U.S. federal response to these bank failures. In response to the bank failures of March, the U.S. federal government took extraordinary measures to mitigate fallout across the banking sector. On March 12th, Federal Reserve created the Bank Term Funding Program, an emergency lending program providing loans of up to 1 year in length to banks, saving associations, credit unions, and other eligible depository institutions that pledge U.S. Treasuries, agency debt, and mortgage-backed securities and other qualifying assets as collateral. The program is designed to provide liquidity to financial institutions following the collapse of Silicon Valley Bank and other bank failures, and to reduce the risks associated with current unrealized losses in the U.S. banking system that totaled over $600 billion at the time of the program's launch. Funded through the Deposit Insurance Fund, the program offers loans of up to 1 year to eligible borrowers who pledge as collateral certain types of securities, including U.S. Treasuries, agency debt, and mortgage-backed securities. The collateral will be valued at par instead of open market value. So a bank can borrow on asset values that have not been impaired by a series of interest rate hikes since 2022. So basically creating a program to stop the kind of things from happening that just happened, where this bank, in order to cover depositor withdrawals, had to sell assets that were being held as unrealized losses. So they had what would be considered the very safe assets, these debt assets like treasuries, but with interest rates having gone up, if they were to sell these assets on the open market, they would have to sell them at a loss because these were at lower interest rates than the current interest rate. So they sold these assets at a loss in order to cover deposit withdrawals. And this is what led to the failure of some of these banks. So this program is to say, well, you can, instead of selling those assets, take a loan against those assets so that a bank will not have to realize its losses by selling those assets at a loss. Now this has upset a number of people. A lot of commentators, pundits, activists, ordinary people are upset at once again the US government and federal institutions stepping in to bail out banks, very much like they did in the 2008 and 9 financial crisis, where there was a tremendous amount of money made available to these financial institutions who had messed up, and instead of letting them suffer the consequences, these programs came in to provide the liquidity they needed to keep on going and not force investors and depositors to take a loss. So the libertarian free market type of critics would say that people should be allowed to lose money if they invest it in an institution that fails. That depositors should be allowed to lose money if they deposit in an institution that fails. That criticism coming from the more populist left-wing side of politics says that it's wrong for the government to intervene to save the wealth and profits of wealthy investors, because federal programs already cover smaller depositors up to $250,000. That's already covered by a very old federal program going back to the 30s, I think it is. So these additional bailouts that occur when banks fail are to protect much larger sums of money deposited by wealthy individuals and by corporations. So these are the funds of the venture capitalists and investment banks that are being protected in a case like this, where the government stepped in to ensure all deposits, not just ones up to $250,000, but all deposits. So people see this and it upsets them. They say, well, why aren't banks allowed to fail? Why do these banks get propped up and continue to pay the salaries of the people who mismanage them? And why do investors and venture capitalists receive essentially emergency loss protection on their investments and deposits when things go wrong? Now, I would say that this kind of falls under the category of things that are a bit too big to worry about. The whole banking system, the whole financial system is man-made. We made it up. This is not something that occurs in nature. It's not something that was, handed down to us by the gods. It isn't governed by laws of physics or biology. It is a made-up system that goes back a few hundred years at most, that we have created to serve our financial needs. So if we tweak it and intervene with it along the way, we're not upsetting any kind of natural balance that is going to come back to bite us. Now, the libertarians would have you think that there are sound market laws at play here that cannot be tampered with, or you will create undue consequences. Now, I do sympathize with that point of view. When you start shielding certain segments of the economy from risk, you do create unpredictable consequences. But then again, we created the whole system to begin with. We made it up to serve our economic purposes. Investments and hedge funds and loans and savings and treasuries do not exist in nature. And to answer the left-wing criticism of these types of events, I would say that if you were to let these kind of things play out and let everyone just accept their losses, there would be consequences that the average left political leaning person would very much not like to see. It would end up impacting safety nets and pensions and renters and mortgage payers. It would affect the average small person very, very much. So although, yes, we are creating these solutions to protect the rich and protect these large funds by guaranteeing that the banking system functions, it is creating stability for so many ordinary people who depend on a functioning banking system where things go along without collapsing. But I don't want to just leave it there, because I think there is some criticism that is very valid, because it is very constructive criticism and brings out a powerful point that needs to be heard. So I brought up this article here I'm going to read a bit from. It says, "Hooray! We now have Medicare for all. Bank deposits," in parenthesis. "The bailout of Silicon Valley Bank's depositors means every dollar in US bank accounts is insured by the federal government. For everyone who's fought and bled for years to get Medicare for all in the United States, I've got some great news. The government just created it on Sunday. Yes, this is Medicare for all bank deposits rather than Medicare for all people. But if we think this through, we'll see that both these things are great ideas and make sense for the same reasons. And there's no reason that if we have one, we can't have the other. So this is an article by John Schwartz in The Intercept. I'm going to put a link in the description below, where he highlights the pretty fascinating fact that without passing any kind of laws, just executives and bureaucrats making decisions and putting those decisions into effect, a whole new system of guaranteeing deposits was created with many hundreds of billions of dollars in insurance and loan guarantees backing it. From one day to the next, we now live in a country where all bank deposits are insured. And this was done over a weekend without any act of Congress or a president signing anything into law. So why not do something like this to create other kinds of insurances, other kinds of loan guarantees to solve other kinds of social problems? You could say, well, how will we pay for that? What about the unintended consequences of removing risk and all those kinds of things? Well, if we can do things like this to smooth out society, make the lives of ordinary people better, easier, and more secure, then I would say that this is the purpose of having government in the first place. If you're going to tax people and regulate the economy, you may as well do it for the betterment of the average person. And if you can do this for bank deposits, you can certainly do this for other things like healthcare. If you can expand a deposit insurance scheme to cover all deposits, you can certainly expand a health insurance scheme like Medicare to cover everyone who may possibly need it. And finally, I want to read a little bit actually from the book of Leviticus, where we see God giving his people laws by which to govern their economies based on altruism, justice, and having faith in God. In Leviticus chapter 25, it says, "Wherefore ye shall do my statutes and keep my judgments and do them, and ye shall dwell in the land in safety. And the land shall yield her fruit, and ye shall eat your fill, and dwell therein in safety. And if ye shall say, what shall we eat the 7th year?" Because the 7th year they were supposed to rest and not work the ground. "Behold, we shall not sow nor gather in our increase. Then I will command my blessing upon you in the 6th year, and it shall bring forth fruit for 3 years. And you shall sow in the 8th year, and eat yet of old fruit until the 9th year. Until her fruits come in, ye shall eat of the old store." So God's ideal economic system is one where you trust in God and you do good for others. Those are two powerful principles, and you put them together and you have the basis for a truly humanist, environmentally friendly, sustainable economy that would probably be a lot better than most of what we see today. Well, thanks for watching. Please click the like button, subscribe to the channel, and I will talk to you again soon.